17-day to 3 cycles. So your maximized earning potential is going to increase from being 10% a year in most trading styles up to 30% or greater. Okay, we'll skip over to the Qs. This is the NASDAQ, not much different. This represents more stocks that the average everyday person trades, and it is coming to a point where it's at a critical convergence point. It's either going to fail and come back a little bit, or it's going to break out, and that's going to be the beginning of the bull market for the NASDAQ. These are the early risk takers, and this is where the masses start participating. So in our opinion right now, we've got just a little bit of downside risk, but the general propensity is biases turn positive, slopes are turning positive on the longer term. Short-term slopes, from a mathematical standpoint, are showing the risk where it can pull back to 30. But there are more signs to the positive than there are to the negative in the Pro 17 system, which generally tells me we have bottomed, we're not going to retest the lows. It's going to come back, it'll be a healthy correction, and the market will resume an upward trend. That is defined by this slope transition right here. This is the last of the negative. This is the beginning of the positive. That's a transition in market behavior. And just to show you, most people don't trade in the market, but they do trade ETFs. And some of the ETFs that the current subscriber base are trading in mass is the gold index. This is a gold ETF that represents the market. While we watch CNBC, the analysts are always saying gold is the place to be, gold is the place to be. Well, if you just bought gold all the time, you would lose money. And it's the same as any other stock. This has the same patterns. These behavioral patterns, we are defining when it's going to sell, what it's going to fail to. Right here, we said that it would fail to 85. We also recalled it right here as the gold market was climbing up. We showed that it was going to still fail down to the 85, 86 range. Now the gold markets are showing that it has a real chance of breaking its support levels as these slopes in here on the longer term are shifting negative, and negative behavioral convergences are failing. So the gold market itself has risk right now. If you use the ETF right here as a choice, the gold prices have risk down to the 76 range. And that range is as wide as 70 to 78. So if you're long gold, you have to figure out a way either to protect your principal side as it goes through a failure process, or you need to pull out and get ready to buy back. If you're on the short side of this market, you have an opportunity to test this average and have a greater likelihood that it's going to fail than succeed at this point. Now your risk on the other side is if this is the bottom, this could be what's called a failure to fail point. If it cannot crack this, it's going to bounce back and rise back up to the 88 to 91 range. So this tool is going to give you some guidance. Well, how do I trade it in the next 7 days? How do I trade it in the next 17 days? This thing is all over the place. This one gold index, I'm confused, I don't know what to do. This is going to clean up your behavioral patterns and how you want to make your decisions for your positions. Another one that a lot of the subscribers trade is oil. Oil is, as we all know, the price of gas has come down. Oil just has not broke out. It hasn't gone to $150 and going to stay there forever like everybody was saying a year ago. It's different now. So I'm going to use this particular graph to show you what I look at on a micro basis when it comes to behavioral patterns. We'll shift down to 6 months here. Right here you have the long-term slopes are starting to shift to neutral, but they're not quite positive. So you just have a flattening out basis in the market, which narrows your trading capability in this particular index, which is oil. You have a positive behavioral convergence, which basically tells me the bottom in oil is set, but it's not completely out of risk. There's just not that much downside in oil in general. In the upside part of this is, yes, there's upside, but it looks to be a relatively flat, benign behavioral pattern. People are not concentrating on oil right now as the place they're going to make their money. So only long-term players are here. They're not they're not coming to oil. They've given up on oil. This is not the market to play for the next 17 days on the buy side, unless you're playing it for small incremental moves of 1 point. And that will be defined in your analysis on Pro 17. Mike, I want to skip over to talk about our sure trades. So
okay.
Each week we update the general market, the spider, the diamonds, or the Qs, whichever is coming in from the subscriber base the most. We give that general analysis. And also, what I do with the pool of our subscribers, I don't go out and look for research ideas for you. A lot of you are paying for a subscription basis from other companies that do a lot of fundamental analysis, and they tell you what to buy and sell. And a lot of times they're better, they perform better than the market, but they're not 100% of the time, nor are we. But they give you better guidance. Now you need to take those, if you're subscribing to those other venues and you like to trade their stocks because of the fundamental analysis, you bring those to the Pro 17 system. I do the analysis on top of that, and that tells you when to buy. It tells you when to sell. It doesn't. You don't have to wait for the update from your subscription from another analytical tool. And then what I do, how we get to sure trades for Pro 17 is this. I look at 100 stocks a day at least coming in from the investors. I do the analysis on those. Out of those 100 stocks that come to me per day that I'm doing analysis on, 1 or 2 are going to stand out as exceptional buys or exceptional sells of stocks that are going to tank. If they read that they are going to produce a 20% return or greater within a 1 month or 17-day cycle, I will put out a sure trade indication for all of the subscriber base. So that way, if 30 of our subscribers are all looking at one stock, and that one stock at that one point in time has generated a sure trade buy side where there's 20-30% upside, that's going out to you. And you get that part of it free based on the mutual fund or the aggregate trading portfolio of all the subscribers that are utilizing the Pro 17 system. So once in a while, your stock is going to make it in there. And I don't differentiate whether the stock is a 25-cent stock, a $100 stock, or a $300 stock. I take the emotions out of it, and I'll put a sure trade status on any stock that fits the criteria. If it is a penny stock, I'm not recommending a buy or sell. If it's a $100 stock, I'm not recommending a buy or sell. But I'm telling you, what I'm trying to define for you is if you're a person who likes to trade a 25-cent stock, a $100 stock, or a $300 stock, this is the time for action on that particular style of stock. And it drives your attention to it, allows you to make a very short-term decision to compensate for losses in other positions. It puts you in a position of knowledge and action steps that you can take to make money in that position. So I'm going to go over 5 of the stocks that we've done here just since the first of the year. The first one is DD, which is DuPont. We put the buy recommendation on that at, let's see, where are we on that one? Bear with me one moment. On April the 1st, we put out a sure trade status right here. We didn't catch the absolute bottom, but our forecast was at $23.44. And we touted a $27 to $30 number. Now, utilizing Pro 17, what I identified is the positive slope shift mathematically had occurred. This was a confirmation, this convergence was a convergence of 2 behaviors, and it shows the behavioral pattern shifted back to a positive bias. So we had put this for an individual investor right here at the $17 range as a buy. This is when it achieved sure trade status. So the sure trade went out to the investors, and this is the ride that if you acted on that sure trade at $34 or $24 range, you were able to hit your forecast of $27 to $30 and